But allow me today, as sort of a market organizer and at least an entity that looks into both sides of the aisle or the coin, this is what we see, at least, very practically. And I'm going to try to oversimplify things. Allow me, if those of you who wanted an advanced discussion on housing, perhaps you would know where to go. But so let's take away. Let's discuss two things. So today you've seen the public offer directive. That directive does two things. One, if you would be able to somehow see as a developer, as a company, as a corporate, if you see opportunity to sell shares, raise capital, to engage in one form of the other, of housing development, real estate, etc., that is one avenue. That is now where at least you would see some sense of regulation, some sense of transparency, and with that, a broader set of participation and reliability and credibility is being introduced, more or less for the first time in the ecosystem. So in that sense, where traditionally we were somehow focused around the banking sector, financial sector, to attract investment in the form of selling shares. And I think that's one opportunity that you should explore. That more or less means organizing yourself as a share company and selling shares. Second is debt. Same story. Selling a bond is something that we haven't really seen, experienced, not only for the real estate sector, housing sector, but also the banks. But I think we're going to see more of it. Primarily, this would literally mean, again, I think in line with the commercial code, you have to be a share company, but you don't have to have a public offering, etc. And there you would be able to issue bonds, attract capital, pay back your bonds, and more or less it would be a loan from a bank with an interest. So these are the two, I would say, plain vanilla instruments that exist. Somehow we could have exploited until today, but for the lack of the regulatory regime, you haven't really touched. Third, then I think we can take a next step in terms of exploring similar instruments. So one good example could be a short-term debt instrument. This would be a commercial paper. So rather than a long-term bond, you could envisage issuing a 1 year, 270 days, a 1 year paper. That would be more or less sort of a private placement environment. So rather than going to a bank, showing your collateral and all sorts of the credit evaluation regime, what you would do is structure your documentation similar to issuing a bond, and the bank looking at and potentially with some sense of credit rating, if it has to be like that. But more or less, it's a way of raising 1 year money, but it's similar to a bond. Another versions of the same story would be issuing a sukuk. Any bankers and interest-free banking business operators in the room? So just go talk to them and see if you would be able to issue a bond-like instrument, a sukuk, where the return for the entity that is giving you the money is not in a form of interest, but sort of a profit-sharing regime. So both for equity and debt, there is Sharia-compliant security type that you should exploit. And I think Ethiopia has a huge potential in that regard. Then third tier of products and instruments, which I would see being more, I would say, more relevant and more interesting for Ethiopians once the collective investment scheme directives are out from the regulator, is REITs. How many of us in the room understand what REITs are? Not at a professional level, but at least you've heard about it. Okay, so it's okay to repeat for those of you. So an ideal world would be, for instance, if I'm developing this hotel and I was trying to raise capital by issuing shares, the Skylight Hotel would have to be a share company, issue shares. The shareholders have to trust the governance, profitability of the Skylight Hotel to buy shares, and then they would rely on dividends from the Skylight Hotel to in the form of returns. But the other form of again raising capital for Skylight Hotel would be, one, we pull in funds, so all of us collect 1,000 birr from each of us. Then we go and get or buy the Skylight Hotel, and those of us who have contributed 1,000 birr expect returns in the form of unit returns, where Skylight Hotel gets it, probably if this would be leased from the lease. So the ideal environment where you would see REITs working in Ethiopia would be a fund manager, a fund organizer. So you have to ask Florence where this thing starts. It's always confusing to me who initiates REITs and especially income REITs. But there are various forms of REITs. So at least speaking of income REITs, it would be a form where you would say, I'm raising 2 billion birr. Each of you can contribute 1,000, 5,000, 10,000. You don't have to wait for dividends. As long as the building is occupied and you see the occupancy rate and you see the lease rates, individuals would be interested in putting their money into the REITs because what they expect is not profit sharing, but rather income from the REITs. And usually the regulations would require the REITs manager distribute at least 80%, 90%, sometimes 70% of the income. They are usually tax exempt, so there will be a pass-through. So in that sense, it's an easy way we collect money to acquire a property. Then that means at least from a developer's point of view, they can get rid of their obligations easily in terms of financing. I think I will let Florence speak about it, and I think Mary talk about the thematic instruments in terms of green bonds that we've seen are up and coming in other regions. But I think in Ethiopia, this would be the plain vanilla, slightly more advanced, and then a bit advanced type of products. And this is what the regulatory regime would do to, for us. And I think by complying to these regulatory rules, in that sense, being a share company, having a good corporate governance, and being transparent, that means the share and bond regime, and the Sukuk compliance, and then the REITs compliance, come as a mandatory obligation for you to somehow get the benefit of easily raising long-term finance.
Fantastic. Thank you so much for that response. And indeed, you've started talking about some of the financial products that can be useful in this housing capital markets nexus, which leads me to my next question to Ms. Mary. FSD, you've been working across Africa in this space over a number of years.
Financial sector experts, but also some who may also be operating in the real estate sector. So I think I'll just say one thing just as I come to respond to that question. I think, how to think about the solution in terms of the financing solution is to think about the problem and to think about where finance is needed for housing or for real estate. So on the one hand, of course, there is the developer. There's a developer who requires construction finance to be able to construct. So that's one pool of capital need. Then there's also institutions, for example, banks that are seeking to increase their lending portfolio towards, housing finance solutions like mortgages, for example. So they also may have a need. But there's also an investor need in terms of wanting to pull your money towards different investment opportunities. And so just looking at that opportunity for an investor, but also an off-taker. So an off-taker is an entity or an institution that has the capacity, because they have the financial muscle, to acquire huge pieces of real estate or housing units for that matter, and then can sell. So they may not be the developer, but they have the muscle and may want to do it because they have in their business model, the objective of acquiring property to sell after development. So I think those different different players have different financing needs. And I think it's always important to have in mind the peculiarities of the Ethiopian market. I think every time I come to Addis, I see a lot of construction going on. So I believe that there is always a demand for construction finance. And I think several of the instruments that can be used have already been mentioned. But again, I still come back to the peculiarities of the Ethiopian market. I think as Tilahun was saying, issuing equities may not be or shares is not too strange for many investors, because I think that happens. I mean, when you look at the banking sector, that has happened, even though those securities are not listed, but they have been issued, and therefore that may not be too new. But when we say in other markets, for example, other markets have used bonds plain vanilla bonds, that means it's a bond that is raised, the money raised from that bond is used for general uses, and it doesn't have a specific thematic focus like a green bond or other labeled bonds. So for other markets in Africa, you'll find that those plain vanilla bonds are not new, but in Ethiopia that is new. I mean, so whereas in other markets they are talking about mainstreaming, trying to mainstream other types of bonds like green bonds or other social bonds. In Ethiopia, the discussion is probably about having the first plain vanilla bond. So I think it's just good to be alive to some of those nuances about this market. And I think, of course, building on from there to build other types of bonds. And I think one of the things I wanted to say is that as FSD Africa in 2021, we did a study in about 4 different countries, Ethiopia being one of them. We were looking at the urbanization. We all know in this room that urbanization is a real thing for our region. Cities are growing exponentially. And we were trying to understand what that means in terms of the investment need to be able to address the needs of the growing housing and even urban infrastructure needs in the different cities. Not all the cities, of course. I know Ethiopia is huge, but we looked specifically at Addis Ababa and Bahir Dar to just understand where the need is, because I guess one needs to understand the context and where the financing need is. And we kind of estimated in that study that about 42 billion USD will be needed over a period of the next, I think up to 2050, if I'm not wrong, or 2030 actually, to be able to meet the need of the growing population in those cities. So one of the things that, could be considered, has also been used in other markets, is bonds that are issued by a city government or a municipality, for example. That can be considered. Of course, there are nuances in different jurisdictions, and that may be something that can be considered. When I look at, I think I saw something about an Addis Ababa, the city of Addis Ababa planning to build affordable housing for its population over a period of time, I think over a 10-year period. And I could see that there is a huge need. So, the question is, where does that money come from? So, of course, there is an opportunity to get money from the national government, but as we know in our various contexts, and I'm sure the same is the case here in Ethiopia, that the pool of funding that is available from national government is always strained. And so there's always an opportunity to consider other financing opportunities. We've seen in some other jurisdictions, like let me give the example in Tanzania. This was not specifically housing, but it is infrastructure, water infrastructure, a bond that was raised by a municipality there. So the municipality raised a bond and raised money that was used to maintain or to enhance the maintenance of their water infrastructure within a region called Tanga. So that water company raised money for that purpose. So, I'm just throwing ideas around other types of bonds that can be considered. When you talk about thematic bonds, and green bonds have been mentioned. When it comes to building efficient, energy efficient or green buildings, I think there's a business case to that as well. I think it's not only just the labeling as green, which of course some argue is not, so long as you understand the ultimate objective, which is there are energy efficiency objectives as well as cost savings for the owner of that building in the long term, there's a benefit. And not only that, I think what we are seeing in some markets is that the investment grade buildings that are built, green buildings, the business case is also such that those buildings have a higher, or rather a lower vacancy rate, meaning that there are tenants who are willing to take up that space when they compare them with buildings that are not green. But I guess that is something that would happen organically even in this market, as we've mentioned. But I think for me, that's what I can highlight. There is a lot to see and learn from other markets, but I'm conscious that Ethiopia is very unique, and I think it's very important to understand the needs in this market, the data, the trends, even the investor habits, because it's investors who will pool their money notwithstanding the fact that we may come up with all types of instruments. I think they have to be attractive to the investor.
Thank you, Mary. And indeed, that's a very important point that you highlighted in terms of the uniqueness of Ethiopia. And now let me turn to somebody who has got an intimate knowledge about the Ethiopian market from the banking side perspective, because you're sitting right in the middle of these issues. So on one hand, you need to raise the financing that you are going to lend as mortgages to your customers. So Mr. Tibebu, from where you are sitting, what has been your experience in terms of raising funding for housing so far, and what sort of challenges have you faced as a financial institution?
Thank you, Simba. Good afternoon, everyone. It's indeed a pleasure to panel on this question. Really, the housing market in Ethiopia, as Mary mentioned, is unique. Is yet really to develop. Majority of the housing market is featured in Addis, in the capital. So there is a huge potential, as Fortune presented, for this market in Ethiopia. For financial institutions, particularly raising the fund is quite a challenge really to finance both on the developer side and the mortgage or the consumer side as well. Because, one of the critical issue is the maturity mismatch that we have, because most of the funds that we have raised are more short-term, particularly on savings, demand deposit, and fixed time deposits. So when you see into this perspective, the gap that we will have in terms of liquidity will not be able for financial institution really to push further in financing the housing market. In the new venture, I think the future will bring a more convenient environment, particularly in raising funds of long-term dates for banks as a corporate bond, and also to look into more sustainable housing. Particularly, the green bond is really an area that the future will look into, to have a more competitive fundraising for financial institutions. So the major challenge would be the liquidity that we have because of the mismatch. The other one is because of, the maturity of the housing market by itself. Has a gap in areas of really proper project management due to the volatility of prices of inputs, construction materials, and dependency majority on Forex, where Ethiopia has experienced much of a Forex shortage. So that really add up to the cost of construction to be more than what it has been planned for the developers as well as the financiers who participate in the financing of the project. So that is another challenge. The other area is affordability because of the factor that I mentioned earlier. The cost of construction will be high, so therefore the price of housing will be high for consumers. Really to access in purchasing those developed houses, both from the financing side as well as from the developer side to price affordably. So that is one of the challenges I can mention as a third factor. Thank you.
Thank you, Mr. Tibebu. And I think you raised a very important point in terms of this lack of long-term finance, which then ends up causing maturity mismatches on the bank's balance sheet, and then you end up having problems with liquidity. So maybe let me turn to Fortune. As somebody who has worked in housing finance from a financial intermediary perspective in different countries across Africa. How have these countries addressed some of these challenges that Mr. Tibebu is referring to?
Yeah, thank you so much, Simba. So I think number one to acknowledge is that often long-term funding is a challenge. So you may not get it as long-term as you want. So if you're going to issue 20-year mortgages, it's not often that you will get 20-year money. So it's around how to make do with what instruments are available in the market. So if you are able to get 5-year money, 10-year money, it then comes down to the ability to be able to manage the balance sheet proactively and to manage cash flows and mismatches and understand when, what cash flows need to come in. And that's how most of the financial institutions have, in the first instance, managed. So a 5-year, 7-year loan, still good enough to, be able to push the agenda on housing finance. And then housing finance also being looked at, you will find that in most African countries, what we've seen is that over 60-70% of consumers actually build their properties incrementally. So you would be able to finance actually incremental housing finance, shorter tenures, but it's achieving the purpose of actually building the housing. The second thing is tapping into the longer term, funds that are available domestically. So earlier we were talking about pension funds and insurance, entities being allowed to be able to invest. So they're able to place longer term funds with the financial institutions. So tapping into those ecosystems to push the maturity profile as much as possible as you can. So apart from the issue of capital markets, those are the two primary ways that I have seen, financial institutions apply what techniques in terms of balance sheet management to actually, achieve the goal of financing the huge need that is there in the housing sector, and at the same time being able to manage those cash flows on the balance sheet. So it's an issue of what opportunities you get to push the profile as much as possible, but then also tapping into the domestic ecosystem around longer term funding that would then come in. So I'm hoping also beyond this discussion is how that could also become a subject of conversation here, because the objectives of pension funds might be aligned with the issue of long-term financing for housing. So they may invest by placing funds with a financial institution, or actually investing in instruments that they are allowed to do so within those financial institutions, or thirdly, participating directly in terms of income generating, real estate. So I think maybe those three broad areas would be how I would.
Thank you, Fortune. I hear demand side challenges, I hear supply side challenges. I also hear a lot of potential solutions we can leverage and learn from what has happened in the other countries. With that in mind, I want to get views from two constituencies. One from the developer perspective, and then I want to get a view from the floor, whether from an investor, from a retailer, or so that we try and obtain views from all the different stakeholders before we get on to talk about what should we expect going forward, and will those expectations be addressed with the pipeline of activities that we are anticipating in the capital market. So with that, let me ask your challenges, your expectations, and your experience in raising housing finance in the Ethiopian market. If you could share with us what you have gone through. Thank you.
Good afternoon, audience. In real estate, we have been in real estate business since the last 20 years. I articulate that the main problem is the financing problem. Project, you can work 24 hours as long as you have finance. You can hire top-notch project management, and then you execute 5 years project within 3 years project. The core things revolve in financing. When we come to from the podium, our friends, I think from Dashen Bank, mentioned some of the things. The finances, it has a lot of challenge. To secure the finance, you have to provide collateral. As you have many projects, you cannot provide all collateral for all projects. As a developer, we build and transfer to house owners, will not have sufficient collateral. So all projects need finance. They have to move faster. The customer complain. They have to, get their houses within the contract period. So just our initial investment may be limited. The project is very big. We collect from advance from the customers. We go to the bank. Maybe after applying, we can get after a year because of the collateral, because of the bureaucracy. And no, I'm sorry, not bureaucracy. The system requires maybe that way. I have to explain it that way. The system requires that way. It might take, our expectation after 1 month, maybe we will get after 1 year. So due to that reason, a lot of delay occur. The customer complain. The cash flow problem occur. Delivery will be delayed. So a lot of problem, occur in that way. So local, that we have to, international finance is very important. International finance. To alleviate the housing problem in Ethiopia, the international finance intervention is very important and crucial. So the gap is that you see the gap, the middle income and upper income. Untouched, for low income. No low income, client need finance also for themselves to buy the house. Maybe they have to pay 30%, 20% or so, whatever. But the rest has to get, loan. We don't provide them, due to lack of money. To solve the problem, 3 things has to be applied in our country. 1, sufficient finance. The second, also technology. The third, policy makers they have to involve. They have to started the PP program, but they have to provide, very low lease price, very low lease price, and then finance technology. So such a way can be work the construction. My experience show me, we can work 24 hours and we supply. So those are very important points. So the finance is very important, I can say. Thank you.
Thank you so much for sharing. I hear finance gap, I hear technology, and I hear policy. Can I take? Unfortunately, we only have time for 2 questions or comments from the floor. I think she was first. Let me start with the lady over there. Over to you.
Okay, thank you so much. We heard that the need, the supply, and the challenge. I wish if representative from Go Bank was there, because they could share the challenge they face so far. They established for this housing financing, and still they are advertising other commercial banking activities. I don't know why. When we see the demand side, the housing demand is mostly for the salaried people and the low income group. So when we see the cost of the housing these days is very high, and it's not affordable for all salaried people, even highly paid people. Fortunately, banking staffs are very subsidized. That is up to half of their salary is prorated for capacity and the subsidized interest. Even them, the cost is very high. So who is going to afford to have a housing? So what is this capital market discussion? What brings us to this area? It is very much interesting and timely, crucial, important. Thanks to these real estate owners, they are very disciplined because they took pre-cost from customers and for the other construction cost from bank. They provide collaterals. They didn't give collaterals though for all that they prepaid, they receive the prepaid amount. They keep for the pairs. So in this case, they need huge capital to construct or to finish that construction. And the construction materials is very costly. So how can we match this, the time and the affordability and this? The guy mentioned that the domestic financing, mentioning pension funds. Maybe the government priority is other. If that will be applied for this by selling bonds or something, it will be assisting. And the other way of maybe the supply chain, this construction materials production, this locally produced materials and low cost. I don't know how this dependency in the import and how the costs are growing. Before some years back, there were a fund that is UDPO something, that is the construction of low-income, low-cost houses. It's not actually low cost. It is very big and accommodating major facility houses. That is in the Saris area, in the Ayertena, and the Boli area. That was a very helping and good experience. Why not we extend such type of experiencing for housing?
Thank you.
Yeah.
Thank you so much. Yeah. Sorry, I have to cut you off, but thank you so much for your views, which we have taken note of. I think it's the start of the conversation. I think in the interest of fairness, I took one from this row. Let me take another question from this row, and then maybe we can close it off in the interest of time. My apologies.
Thank you very much for the opportunity. And I would like to hear what will be the short-term, mid-term, and the long-term plans to develop Ethiopian real estate market. I see 4 challenges, and 2 of them already mentioned. One of them is limited amount of loans provided by the banks. The second one is availability of foreign currency. And third one, I want to highlight again speed of the process to complete, starting from the groundbreaking and delivering the title deed. How can we accelerate this? And third one, we are talking about huge amount of potential. The need is around 500,000 units, and where we can provide only 55,000. So if we accelerate the business in Ethiopia, I'm quite sure there will be a skill gap. So how can we afford this also? Thank you very much.
Thank you for your questions, your comments, and your insights. I think what we'll do is we will have 3 more minutes just for members of the panel to try and respond to some of those questions. But if your questions are not responded to, we'll try and find a way of addressing them tomorrow in the different fora that we're having tomorrow. So, who would like to go first? Fortune, would you like to take?
Sure, let me attempt to answer I think there were related comments actually. There was the issue of the cost of construction being high. And then I think the gentleman at the front was asking about, comparing the need and, the challenge at hand and what we're able to do at the moment. And, but it was quite loaded. He talked about short-term, medium-term, long-term plans. But I think maybe the overall approach from sector players like ourselves is to look at how we obviously catalyze the housing markets to enable private investment to come in and actually, combine the efforts around solving the challenge. And so we are looking at it from both angles of the supply side and, the demand side. The demand side is around access to finance, so working with the financial institutions in terms of building their capacity and also for them to be able to, risk manage their portfolios and also to be able to structure solutions that are actually serving the needs of the market. So we have got, strong program going there, and those are the activities that will actually inform short-term, medium-term, and long-term how we intervene on the access side. On the supply side, also working closely there was a discussion around the construction cost. It's around two things that I could say. How do we drive towards local raw materials? And the second thing is around alternative building technologies that actually bring down the delivery of the housing costs, to manageable rates, to within affordability ranges for the majority of the population. And if you look around, there are many alternative building technologies being deployed across the continent, targeted at reducing the per unit cost of delivering housing. So that's a whole other subject that we could get into, but these are things that are happening, and approaching it from both sides, then we actually try to tackle the issue.
Thank you, Fortune. You have access to the members of the panel as we are going to be breaking for tea, so please feel free to grab them, continue the conversation. My apologies, we're not able to have everybody who wanted to ask a question, but we still have today and tomorrow, so please feel free to mingle with them. So let me take this opportunity to thank members of the panel for this very insightful discussion. And please, if you may, accommodate the participants if they have any additional questions during the tea break or tomorrow. So thank you so much, and thank you to everyone for participating. Thank you.